Welcome to today's market report.
European shares closed their sixth straight week of gains at a new high on Friday, as strong results from Cartier owner Richemont rounded off a robust earnings season. The Pan-European Stock 600 index rose 0.3% to a new peak of 486.75 points and added 0.7% for the week. It has finished at record highs in 4 of the 5 sessions this week. Richemont surged 10.9% and was the best performing European stock for the day after it beat 6 months profit estimates and said it was seeking investors for its loss-making yachts business. The luxury sector also got a boost from France's LVMH, which gained 2.5% on news that Louis Vuitton was planning to open its first duty-free store in China. French blue chip shares also finished the week at all-time highs, with carmaker Renault jumping 4.4% after Morgan Stanley upgraded its stock. The earnings season is confirmation to markets that the underlying growth and demand picture is still very strong, even though there are companies talking about supply issues and margin pressures going forward, according to principal global investors. You're probably going to a point where returns get smaller and you see more volatility. Investors will have to make that adjustment in their minds. The Stock 600 has seen several record highs in November, buoyed by dovish central bank messages, upbeat earnings reports and signs of post-pandemic economic revival. However, ECB policymakers acknowledged on Friday that Eurozone inflation may decline more slowly than earlier thought, partly due to supply chain bottlenecks. Further, Europe has become the epicenter of COVID-19 again, with Germany, France and the Netherlands experiencing a surge in infections and prompting some governments to consider reimposing lockdowns, according to fresh data. Travel and leisure stocks were the worst weekly performers, down 3.7% as investors feared new restrictions. Oil stocks led losses in Europe on Friday, dipping 1% as crude prices were dented by a firmer US dollar owing to market bets of an earlier than expected Federal Reserve rate hike. Mining was the best performing European sector this week, up 4% as some relief over China's debt-addled property market, particularly with developer Evergrande, drove commodity prices higher. Among other stocks, Italian infrastructure firm Atlantia rose 1.7% after raising its 2021 forecast, while Dutch oil and chemical storage group Vopak advanced 1.2% after beating estimates for quarterly profit. Crude oil WTI was down 1.07% at $80.72 per barrel. Brent was down 1.06% at $81.99 per barrel. Gold futures was up 0.21% at $867.85 per ounce. On the FX front, the British pound bounces off year-to-date lows at 133.52, edges up 0.4%, trading at 134.18 during the New York session. In the last 3 days, cable lost almost 2%, driven mainly by US dollar strength, influenced by higher inflation figures in the US economy reported by the Labour Department. Also, a dovish stance perceived by investors in the last Bank of England monetary policy meeting fueled the slide of the GBP. In the daily chart, the GBP-USD pair is trading within a descending channel, approaching the bottom trend line around 133.50 area. Further, the daily moving averages reside above the spot price, though supporting the downward bias. In the case of a daily close above the Thursday high at 134.33, it could spur an upside move in the pair towards the psychological 135 area. That also coincides with the 61.8% Fibonacci retracement level, a price level that GBP-USD sellers would defend to resume the downward bias. On the flip side, failure at 134.33 could open the door for a further downfall in the GBP-USD pair. The first support would be the Friday low at 133.53, followed by the bottom of the descending channel around 133 area, a level last seen in December 2020. A breach of that level would expose December 12, 2020 low at 131.88. Euro-dollar barely declines during the day, consolidating around 114.46, down some 0.01%. The shared currency has failed to gain traction against the greenback, which has remained bid during the Asian and European session, gaining follow-through as the New York session begins.
This is today's market news. Thanks for listening. We'll see you next time.